What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a NIO, raw price action and statistical threat of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining ARCab, our trading community. Okay, you guys, let's go ahead and dive right into these charts. So looking on the macro scale, you guys, this is a daily chart. We're looking at a descending broadening wedge right here, you guys. This is a trend reversal, and also it actually shows the nervousness within the trade, you guys. So we've been writing this since the beginning of our bear market in about December, man, actually way before that, right? This is January 12th, 2021. We actually wrote this all the way down to today, right? So we have now made the three touches that we talk about often in the golden rule of three. Usually after test 3, we face this capitulation event followed by a true attempt at breakout on test 4. Excuse me, you guys. So it looks like we are on that ascent now, you guys. So we were talking about yesterday potentially finding some resistance at our 50-day simple moving average, which is right, sorry, the 30-day exponential moving average, which is right here. And you can see that this is the implied direction that we were looking at. I mean, since it was about up here, you guys. So this is playing out similarly to how we're looking at it. So today's price action ended up using this gap that we recently filled with all this price action right over here, you guys. It used it as a form of support, and it rejected. And in doing so, you guys, we actually covered the gap that we had right over here. And it's almost perfect to that gap. Now, the resistance that we're facing, you guys, is based on the NOT 618 at 1085. As you can see, I can actually draw a trend line right at that one spot 618. So I'm sorry, the NOT 618, so that we can see just how confluent it is. So we used it as resistance. We came back down, you guys, and now we have printed a daily hammer candle at the bottom of a trend. So this is usually, in candle analysis, this is usually a good sign, you guys. This is it signals a potential reversal of price. Now, obviously, we need some more validation criteria in order for us to continue on to the upside. For example, we do have the 7-day exponential moving average acting as a support right now for the price action, which is a very good thing, you guys. And if we open up the SMAs, chances are is that we're probably using the 10 around there as well. Let's see. Yeah, so the 10-day simple moving average is right down here, you guys. This also served as a form of support alongside the gap that we recently just filled, alongside the 382. Some people before it got the 382 took that profit right over here as a short position, and then the price continued on to the upside, you guys. So let's go ahead and now move on to the next chart to see what we have. Okay, so this is the statistical side of the analysis, you guys. New viewers, new listeners, please take a gander at this. This is volatility we're looking at, represented by this indicator, BBWP. Volatility is, in a sense, direction neutral. So we have to gauge a bias and direction by pairing it with this indicator here. This indicator is a momentum oscillator. It's titled stochastic momentum. This has been right, particularly to this. Let's see if we have that metric in here. Okay, no, we actually don't. It's okay. So based on different tickers, you guys, I get an average of about 75 to 85% accuracy in guessing the direction of the asset. And it's not perfect, but when you're talking about 80% on average, that's pretty good to consider, right? So as you can see right here, you guys, we are at critical expansion level, which means that when we're at beyond the 95 percentile, which is this line right here, or below the 15 percentile, when we're below these areas or above these areas, that signifies that we are at critical expansion or critical contraction levels, and it shows that a high amount of volatility is on its way. So I have taken every iteration from where we have contracted from these critical highs And based on, I'm sorry, the criteria for that is actually the duration of the iteration and the upside thrust versus how many times it gets the correction right versus wrong. And the metrics that came back from this back test are these. Please know that these are statistical metrics and they are not certainties, you guys. But this is usually how some pros end up trading, by historically backing or historically testing metrics similar to the volatility. In this case, it's volatility versus momentum profile. So we're looking at a total of five iterations from the entire history of trading and of the NIO stock or the NIO asset. We have guessed 4 out of those 5 iterations to the upside correctly. That gives us an upside accuracy of 80% with an average upside thrust of 257.53% over the span of about just over 84 days. This is proof of work, you guys. So if we apply that 257.53 metric to our position right here, or from the firing of the signal, which would be right around here. There you go. Yeah, right around there, which would be right there, you guys. So it puts us at a curious level. We take it right to the 1.618 Fibonacci ratio, you guys. We clear it, and in doing so, we look at the top target is 38.76, but know that this is over the span of an averaged 84 days. So you can see that we've used this range as an incredible support, and it's very much used. So we have to look for confluence within targets like this. You can see these candles using it as well, you guys. This is incredible. So this would likely be an area that the price would go based on a move like that, you guys. So now that you can see, the expansion phase is almost, the contraction phase is almost at where we need it to be. We're looking at the volatility component of BBWP and the moving average now moving below the 90 percentile, which is the criteria that we need in order for us to apply the 257.53 metric. So we need both of them pivoted to the downside alongside stochastic momentum suggesting upside. You guys, this is a strong pivot, and it's also a strong pivot from historical lows. We have never touched this low on the stochastic momentum oscillator during the entire history of the NIO trading sessions, you guys. So this is substantial. We're looking very good for the stat. So but just know, you guys, that this is also just 5 iterations. I mean, not financial advice, you guys. I please take whatever I do say within these videos as a form of entertainment. Do your own DD. We'll be okay, right? I usually tend to bet more money when we have 80 plus iterations, you guys. But I mean, so far 80% is pretty darn good, right? Okay, so let's go ahead and move on to the next chart to gauge a bias in direction, you guys. So yesterday I did mention that we saw a gap right over. Sorry, you guys. This was a slight mistake of mine. So we just have to put it like this: that we saw a gap right over here, and the range was. I need to correct this actually, you guys. So that would be 1018 to 1052, you guys. So we'll leave it here for you guys to be able to refer back to when you need to see. But yeah, we saw the gap, and we saw that it's a psychological component, and people will usually like to cover the gap since we're already here, right? You guys, we have since covered that gap and recovered, and now we can use this as well as moving averages, as well as this ascending channel that it looks like we're forming as a form of support for a continuation onto the upside, you guys. So things are looking okay. Now, based on raw price action, you guys, usually this candle at the bottom of a trend, a hammer like this, presents a continuation to the upside signal. Now, obviously, we need to back it with other indications or validate it with other metrics, but this usually presents an upside, and the following candle would be the confirmation. But this candle actually printed as an indecision candle, and the next 4-hour candle that we're on currently right now looks a little bearish, and it hasn't really returned anything from what it's lost. It's currently right over here, you guys. So if I were to say for example, if I were to guess to see what's going to happen, you guys, is that potentially we can see another downside move to test the $10.18 level of the gap right over here, you guys, and potentially wick down to this bottom support, which is the channel support, you guys. If it is that we are within this channel, we need two tests of the channel resistance and the support in order for us to validate that we are within the channel in the first place. So it's looking like we may actually attempt to try that second touch, and that would complete the ABCD strategy, and then it can turn into something that Elliott wave theory calls as, I think, the A to E. I forgot what it's called, but it would be another strategy within that, you guys. It's more theory, right? Okay, so let's get a bias and direction for this, you guys. We called 3 drives of hidden bearish divergence for the 4-hour time frame, and it has since realized, and it's still going, you guys. So this is still looking a little bearish as well. Excuse me, you guys. Let's pull up a multi-pane and just get a bias in all that direction right now, you guys. So let's maximize all these. Just a sec, you guys. My apologies. Okay, so we're going to line them up just like that so you can see what we're looking at. Apologies for the lines. It's just all this stuff right here, you guys. We're going to be looking at primarily these sections. So yeah, let's go ahead and start with the immediate short-term time frame, and this is going to be the 30-minute, you guys. New listeners, this is a regular RSI setup. This is the bullish control zone. The bottom half is the bearish control zone. You have bull weakness percentile, you have bear weakness percentile, and you have the strength percentile of either on the upper halves. Okay, so we have now the signal line of the RSI has made a bearish cross below the moving average, you guys, but it is sitting. Yeah, this is potentially bearish for the immediate short term because it's a slight downside pivot, you guys. We have a bearish cross, and it's now in the shallow areas of the bear weakness percentile, which means that we can be gravitated into bear strength percentile, you guys. So this could be in accordance to what we're talking about as far as testing our channel bottom. It's actually in this chart right over here, you guys. So yeah, it's in accordance with testing this bottom of the channel. This is what we're talking about for the 30-minute for now. But let's go ahead and move on to a higher term time frame. This is the bi-hourly RSI, you guys, and it is suggesting a slight downside. We are below the moving average, which is bearish. Now, we can't hold too much weight of the downside here because we are in the shallow areas of the bear weakness percentile, which means that we can always be gravitated towards the bull weakness percentile, you guys. So now let's look at the 6 hour and see what we have. Okay, the 6 hour is in a sense neutral, and I say this is because we're smack dab in the middle of this, you guys, and the pivot isn't exactly favoring the downside too much. It's a weak pivot, so there's no edge in direction for that one right there, you guys. Let's look at the 12 hour. Yeah, the 12 hour is also in a sense suggesting a downside, you guys, but you can see that we've been using the moving average as a form of support before continuing on to the upside. That could likely be what's happening right here as well. So what I'm talking about here, you guys, it's likely indecisive like this because of the economic data coming out, you guys. We have a CPI, we have the midterm elections on the 15th. So, you know, the trades are going to be they're going to be an indecision for now. So for entry, you guys, please remember, just remember that I'm not a financial advisor. Take whatever I do say, again, as entertainment, right, you guys? I wouldn't suggest entry into this asset just yet, you guys, especially since we're in the middle of resolving the short positions right now within this. Let me just go ahead and make this larger. We're resolving the short sellers. They wanna reach their D point. So I think honestly we still have some ways to go before we can consider some type of entry or play for NIO stock, you guys. But nonetheless, it is looking very good, and I do still see a massive upside potential within this, you guys. Likely to be resolved after midterms, which would be probably Wednesday next week. But this is still suggesting massive upside, you guys. We have to keep that in consideration. But this is a good place for me to leave off the video, you guys. If you have any questions or concerns, reach out to me on Twitter, on Discord. I'll make sure to leave the links in the description below for you guys to consider joining the trading community, ARCa. I'm on Discord, you guys. With that said, I wish you a good night, and I will catch you at the bell mañana. Adios.